Okay, good afternoon, everyone. Welcome to our monthly town halls. This afternoon, we are focusing on a very cardinal financial literacy concept, or rather financial concept, titled budgeting, with a particular focus on it being a means to an end for you to be able to better save and invest for your future needs. As introduced, my name is Mubanga Kondolo. I am presenting today's town hall on behalf of Stali Mugala, who you would have been expecting, but couldn't make it for reasons beyond our control. So we will kick the presentation. We'll kickstart the presentation by first of all understanding what budgeting is all about. I think overally, we deem budgeting as a very simple concept, but in actual sense, very few of us actually do budget on a day-to-day basis for the expenses that we have. So I would like to delve into the discussion today to focus on the importance of budgeting, also the importance of saving and investing, as well as have an opportunity to introduce a budgeting tool that we have devised, which we can share with you, and hopefully you can use going forward. So to start the meeting, we would just like to define what budgeting is all about. Essentially, budgeting is the process of formulating or creating a plan to help manage your financial resources. In this case, in simple terms, we're looking at financial resources as simply being money. The money that we earn from the various activities that we do, various economic activities that we're engaged in that help us to generate money that we use for different purposes in our day-to-day living. So essentially, why do we budget? The question you may ask is, why do we budget? And in helping us ascertain why it is important to budget, we feel budgeting helps us to evaluate our financial situations. It also helps us to determine what is important in our lives. It helps us to arrange what we think is important in a logical way. And it also provides a framework or a structured framework which can help us shape our lifestyles. And we have some of the components of the budget, which include income, expenses, savings, and investments. So just to also mention that budgeting is not only essential at a personal level. Budgeting can be done at a family level. It can also be done at a company level, even at a national level, and so on. And we will delve deeper into looking at some of these components that I mentioned, which form the budget, which is the actual tool that we use to help us track our income and track our expenses. So how do you create a budget? First and foremost, it is important to assess your income sources. Income sources can span across children, youths, adults, and so on. For children, we should know how to assess that income and be able to essentially identify all income sources. That's the first point. And then we move to being able to track our expenses and be able to monitor where we are taking our money. Every quarter should count, and we should basically be able to account for how we spend our hard-earned monies. So in doing so, there are some critical guidelines that we can follow when it comes to being able to track expenses. And this could be by level of prioritization and being able to determine what our needs are versus what our wants are in this case. So it is essential that first and foremost, we identify what is essential and what enables us to live on a day-to-day basis. This will obviously include expenses that relate to your housing, which sometimes is referred to as the four walls expenses. The housing, if you don't own a house, are you paying mortgage for it? Are you paying rent? We need to pay for our utilities, in this case, being ZESCO utility, ZESCO power. We need to pay for water bills. We need to also pay for waste management and so on. And then we also need to account for other expenses, such as, in this case, we are looking at budgeting as being a means to saving and investing. So you will see in the next slide where we are talking about being able to pay yourself first before you can even think of covering some of these expenses that I've mentioned. We will look at the 80-20 principle, and we will just learn to appreciate why you should pay yourself first. So once you do that tracking of your expenses, you also then set your financial goals where you can take time to establish short, medium, and long-term objectives. These would be financial goals. In the short term, you would look at acquiring, for instance, some furniture and so on. In the medium term, you can look at other financial goals, such as being able to take yourself to further your education. And long-term objectives would be looking at financial goals that would require a certain level of investment, such as being able to construct a house for yourself and your family, and so on. And after that is all done, you should then be able to allocate funds for saving and investments by prioritizing this particular activity in your budget. So what are some of the benefits of budgeting? First of all, you will have control over your finances. This will essentially help you to effectively manage your income and expenditure. And it will also help you achieve your financial goals, like I just mentioned. And the budget, I think, creates an opportunity for you to be able to think thoroughly about setting some of these financial goals and how you will accomplish them going forward. It also helps us to be financially aware, where we basically have a better understanding of our financial wealth, our financial situations, and how we can improve on our financial situations in an event that we are running on deficits, because the budget actually does have the ability to tell you whether you are faring well in your finances or whether you are running in deficits. And it can be used as a remedial measure, which you can use to adjust according to the expenses that you are spending your money on. It also helps us to be prepared for emergencies. We live in a world that is full of unforeseen circumstances, unforeseen events, and most times we are caught unawares. And in essence, we find ourselves looking for financial resources from relatives, friends, who in some cases may not be able to help us. So it is important that we also consider budgeting for these unforeseen events going forward. This could be your hospital bills. It could be your fines and so on, as an example. So budgeting as a means to saving for the future. We will start first of all by defining what saving is. Essentially, saving is putting money aside for future use. Money that you have now but don't necessarily have use for, you can save for future use. And what are some of the forms of saving? For purposes of this town hall or this engagement, we will look at saving with a particular emphasis in the financial sector. What are some of the financial sector products and services that you can leverage on to save the money that you have that you do not have any use for at the moment? So we have regular savings accounts, fixed-term deposit accounts, as well as treasury bills, among other savings methods. When we're looking at regular savings accounts, these are basically accounts that are held by banks, for instance, which can be used to save for any expenses that you may have. This could be emergency funds expenses or any monies that you may use as a buffer in an event that you are not earning any money at a particular time. Fixed-term deposit accounts, these accounts are of high interest nature and yield more than the regular savings accounts, meaning that you are likely to benefit in terms of interest payments on a fixed-term deposit account. But I should also mention that this account is usually very strict in terms of being able to allow you to withdraw at any given time. And if you do decide to withdraw at any given time, it usually comes with penalties, which may result in losing the value of your savings. We also have treasury bills, which are basically short-term financial instruments where the government uses the money markets to raise finance for purposes of national development and so on. So as citizens, we are also given an opportunity to invest in treasury bills, which also come with a return in terms of yield or interest return, usually paid as a coupon and your principal back. So what are some of the strategies for saving? I spoke earlier about being able to apply the 80-20 rule, which basically is imploring us to pay ourselves first. Essentially, there is a principle which states that 20% of the time that we spend results into the 80% output that we see. So for instance, if you're working somewhere, 20% of your time will result in the 80% output. And thus, it does encourage us first and foremost to pay ourselves that 20%. So if you're getting 10,000 kwacha, for instance, as a salary, what we're basically saying here is remove 20% of the 10,000, in this case being 2,000 kwacha, and direct it towards saving or investing. Thereby, you pay yourself first, and you'll be able to build your financial future going forward. We have also put a statement saying automate if possible. It's usually difficult to remember that you need to save or to invest when you have cash at hand. We do realize that we're only human, and sometimes we are driven by impulse. And at the end of the day, you will hear people saying, I don't have any money to save because I spent it all. And most times we're unable to account for what we actually spend the money for. So we have technology now and also digitally enabled financial products and services, some of which have savings features. And all we're saying here is that if possible, automate your savings so that when you have that regular income that is coming on a particular date, it can go straight into your savings account. We also now move to the other concept on investing, and we're saying you should invest for your future. Like we have done on saving, we will look at defining it, discuss some of the forms of investing, and also the strategies for investing. How do we define investing? Essentially, is putting money into assets, in this case, financial assets, with the expectation of earning a profit over time. In most cases, we do have resources that we do not have need for. And the same way we can save that money, we can invest that money into financial assets that can give us a return on top of the money that we have put in. What are some of the forms of investing rather, that we have in the financial industry? Particularly looking at the capital markets, we have debt and equity instruments. We have unit trusts or collective investment schemes. We even have other forms of investing these days, such as crowdfunding and so on. So for debt instruments, an example given there can be government bonds or corporate bonds. Essentially, an entity such as a business will be looking for financial resources to improve its efficiency or to grow, and will come to the public and give an opportunity to investors to invest into it, thereby lending it money over a period of time. And that corporate or business entity will basically be promising to pay back the investor, except they won't be paying back the exact amount that the investor has paid or that the investor has lent to them. They will be paying back with some interest payment on top of that investment. So we can leverage corporate debt, corporate bonds in the capital markets as retail investors. We can also leverage on the capital markets by participating in equity instruments. In simple terms, equity would refer to your common stocks or shares. An example would be the 23 listed companies that we have on the Lusaka Securities Exchange, who raised money from the public by issuing an initial public offering, which essentially invites retail investors as well as institutional investors to be part and parcel of those companies by acquiring shares through the money that they invest. So we have an opportunity there to reap from our investment in the form of dividends or capital gains that are offered by these companies in the event that they do run a profitable year at any given time, and if at all they declare dividends or capital gains. We also have unit trusts in Zambia, particularly known as collective investment schemes. These are essentially instruments which facilitate for the pooling of resources from a wide range of individuals. Usually, the unit trusts are targeted at small savers who come together and invest towards a common pot. This common pot could be, again, channeled to government bonds, corporate bonds, and so on. So essentially, an investor in a unit trust will own a unit or will have a part ownership in the collected pool of resources and will be able to benefit in the same way through interest payments. So the strategy there that we're imploring people to leverage on so that we do not have any excuses for not investing is to apply the 80-20 rule. Pay yourself first, and again, automate if possible. What are some of the benefits of saving and investing? Firstly, it helps you to build your wealth over time and improve your financial health. Rome, they say usually that Rome wasn't built in a day. So over time, if we're dedicated and we commit resources and regularly save and invest, we will see that our financial resources over time will start to grow, and ultimately we will be able to see that we have built wealth. In terms of improving your financial health in this case looks at resilience. How well resilient is one to shocks that may emanate. We're looking at scenarios where we have economic shocks, where we have, for instance, a negative outlook, where the economy is not performing well and liquidity is very tight. So in an event or scenario where liquidity is very tight, maybe you're not working and so on, how well prepared are you for that sort of situation? Is your financial health in green or is it in red? Are you able to sustain yourselves for 6 months without earning any money at all? That is the emphasis of financial health. And with saving and investing, we're saying that could help improve your financial health. Saving and investing also enables you to accomplish your financial goals. I won't belabor on this, but I think I touched on it. Your financial goals could be related to your personal aspirations, such as education, being able to own assets, land, housing, and so on. It also helps you secure your retirement or life after you're no longer working. We reach an age where we don't have energy anymore, and we do not have the ability to generate any revenue. Aside from looking for help, again, from family and friends, we literally, in most cases, have only ourselves. And we hope that by the time each one of us is in retirement, we will have exercised some of these financial concepts, such as saving and investing, to help us secure our life after we're no longer working. In most cases, also just touching on the last part, which is speaking to contribute to national prosperity. Most times we save and invest with a personal lens and not necessarily appreciating that everything that we do can help us be better patriots and help us contribute to national prosperity. For instance, Zambia currently has a Vision 2030, which aims to be a middle-income nation, a prosperous middle-income nation by 2030. And that cannot be materialized unless each one of us is playing our part. So how well are we using our resources in terms of being able to create generational wealth for our nation? It's by adopting some of these principles, such as saving and investing, that we can be better patriots and see the prosperous country that we aspire to have. This slide is now looking at setting investment goals, short-term versus long-term goals, being able to determine your investment horizon, determining risk tolerance, being able to assess your comfort level with risk, establishing investment objectives, where you should be able to define specific investment objectives, such as wealth preservation, capital appreciation, income generation, diversification, and new concepts that we have now, such as socially responsible investing. In terms of short versus long-term goals, what could help you ascertain this is probably the level at which you are in life. I will give an example. If you are a student who's just finished secondary school and essentially looking to get into university and ultimately starting work and being able to have a family for yourself one day, you will see that you have a very long horizon in terms of time upon which you can use your resources to save. So your preference there may be at the time to start investing in the long term so that you can save and invest money over the 25, 30, 40 years of your working life. If you're a pensioner, for example, or if you're a retiree, you will be probably looking at shorter term investment portfolios, which in this case would be helping to provide you with your short-term needs for your day-to-day expenses because you're no longer earning regular income. So that's just a synopsis to give how one can determine the investment horizon using a time horizon. In terms of risk tolerance, investments are usually are associated with risk, and you will notice that high-yielding returns are probably, in most times, usually have a higher risk. So what level of risk tolerance do you have? Are you able to invest in high yield investments, or are you just comfortable with low yield investments? So I think it is also important to introspect and be able to determine the level of risk that you can tolerate as an individual. In terms of establishing the investment objectives, the first one I touched on was wealth preservation, which basically seeks to retain the value of the investment that you have invested in. This could be through capital gains that have been given by the company that you have invested in. And also this helps you to mitigate inflation, which could potentially erode the value of your money over time. The same way as capital appreciation, this would basically be looking at growing the value of investments that you have over time. Income generation, are you essentially looking at regular income? And is that the reason that you are investing? Diversification also is another important element because it helps us to spread investments across the different asset classes. In this case, asset classes could be your equities, could be your debt, your bonds, and so on. So it also helps us mitigate against risk by spreading our investment, because any area which will not be performing very well is likely to be cushioned by the other asset class. Socially responsible investing these days basically speaks to promoting a sustainable environment, and we now have socially responsible investors who will only invest in responsible businesses that whose business rather is not eroding the environment. For example, an investor won't invest in a company that's cutting down trees and not replanting them. So those are just some of the dynamics that one can consider when establishing investment objectives. Just to amplify also the issue of risk and return again, just to be able to understand that every investment has a risk, and there is an existent trade-off between risk and return. Like I mentioned, the higher potential returns come with higher risk and vice versa. The factors affecting investment risk include economic market fluctuations, such as the exchange rate, economic conditions, and industry trends. For instance, strategies for managing risk include, again, diversification, being able to leverage transferring instruments such as insurance, which protect your assets, data analysis, which helps you to do research and get more information on an investment portfolio or any business that you wish to invest in. And also basically helps you to make sound financial decisions. I did mention earlier that we have devised a tool which we can leverage to budget. This is called the Rack Track, Simplifying Financial Management. Rack Track is an Excel-based budgeting tool designed for users. What are its features? Just to give a high level narration of its features, it's user-friendly. It's easy to navigate for users of all levels. It helps us with expense and income tracking because it has pre-inserted formulas for accurate tracking. It's customizable in terms of the categories that it has, the various lines that have been provided for expenses, incomes, saving and investing. So we can tailor it according to our individual needs or individual situations and financial insights. We're able to gain valuable insights into our spending patterns. What are some of its benefits? The first one is being having an enhanced financial management. It promotes responsible spending and informed decision making. It enables us to have a streamlined budgeting by saving us time through the already pre-inserted formulas. It enables us to be financially aware by fostering a proactive money management tool. It's accessible. I mentioned it's Excel-based and it's convenient. In essence, it can be accessed anywhere. Distribution. We will be sharing this Rack Track tool immediately after this presentation. So at this point, I will stop sharing and I will possibly illustrate how we can use this Rack Track tool by ourselves at any given time. So what you're seeing now is basically a depiction of the Excel sheet with the various categories: income, expenses, such as financial obligations, and daily living expenses. Okay, so I'm sharing the tool. I hope it's visible. I will just try to maximize it a bit more so we can follow much easier. Okay, let's do that. Chone, please confirm if you can see it.
Yes, we can see it.
Thank you. So what we have are columns and rows. Just to go through the columns, we have the revenue column, and we have a time horizon from January to December, highlighted in green. And then we also have income as well as expenses. Sorry about that. Okay, so I will start by illustrating under the February column right there, looking at revenue and the various sources of income that we have. Under row 5 to 6, for example, we have wages and we have interest payments or dividend payments. So I will give a hypothetical scenario where one is getting 10,000, for example, through wages. So if you pay attention closely, you will note that under the total, the figures, they are changing. So under wages, we have 10,000 kwacha as an example. And we have, for argument's sake, an interest payment of 1,000 kwacha. So we see that our total income has come to 11,000. And we may have miscellaneous incomes such as cash prizes or cash gifts on our birthdays from family and friends. We'll put another 2,000 kwacha there. There we have our 13,000 total income. And we move to the 4 wars expenses. The 4 wars because we're looking at it as home expenses, which are priority. If it's a mortgage or rental expense, for argument's sake, we may put it at 2,000 kwacha. Or to be more realistic, maybe 3,500 kwacha. Insurance payments for your motor vehicle insurance. If you're on third party, for example, you will be paying 350 kwacha, just for argument's sake. Any repairs, home repairs, 500 kwacha. Services we may be subscribed to, maybe another 500 kwacha there. We have utilities, another 500 kwacha. So we see so far our total expense, as an example, would be at 5,350 kwacha, keeping in mind that we have a total income that we're working with of 13,000 kwacha. And then it comes to your daily living, groceries. We can put that at 1,000 kwacha. Childcare, we can put it at 500 kwacha. There's dry cleaning, for example, 100 kwacha. I'll just be slotting in the figures there randomly. Dining out, another 100 kwacha. House cleaning services, 500. Dog walker, for those that love our dogs, you can put a 50 kwacha there. If you have transportation expenses also for fuel, 500 kwacha. Insurance, I'll ignore that one because we already covered it up there. Parking, 50 kwacha. Public transportation, if any, 500 kwacha. Okay. And so on and so forth. So the idea is that we also now have the financial obligations, which will be representative of the 20%, firstly, of the 13,000 kwacha. So I will focus on this one a little more so that we can apply the 80-20 rule that we are proposing. Let me just quickly get 20% of 13,000. That's 2,600 kwacha. So we can put it on 2,000 there. We can put a 600 there. So we see that for February, this will vary at personal level. Total expenses were at 12,756 kwacha, while our income was 13,000 kwacha. So it tells us whether we have cash short or cash extra. So in this case, we have cash extra of 244 kwacha. And that comes to the end of that illustration. Schone, we will be sharing this rack track soon after, as promised. Unless we have any other questions, we've come to the end of the presentation for today. Thank you very much.
Thank you for that lovely presentation. There's so much to take in. I mean, this is a type of meeting which one would have to watch over again just to make sure that they're following the steps step by step. this gentleman.
Okay, I think I can answer live. Okay, so essentially, we have information that is publicly available on our website. We have, in terms of the guidelines, we have a tab on our website, www.sexzambia.org.zm, where you can go to guidelines and look at the various statutory instruments or frameworks that we have issued so far. One of them being the Securities Green Bonds Guidelines of 2019 that you are referring to. But should you require any further information, you can easily reach us through our email, the public email info@sexzambia.org.zm, or you could reach me directly since I'm already addressing you on the platform. It's mkondolo@sexzambia.org.zm, or Schone Chanda at sexzambia.org.zm. So please do feel free to reach out to us, and we'll be able to address you accordingly. Thank you. I also saw another one on budgeting too. Perfect. Can you perhaps also share an investment portfolio tracker? We will possibly be in a position to do that. We can devise one for that particular purpose, seeing that this session was looking at budgeting only, but we do already have some resources where we can leverage some of the investment portfolio trackers which we can share. What are some of the common budgeting mistakes to avoid? The first one, obviously, is not budgeting at all, because we will be in the dark, and we will not be essentially able to have an oversight of how we're managing our monies. You will not be able to track your money, your income, your expenses. And also probably another common budgeting mistake is to not focus on priorities or needs. Most times people may budget for things that are not very essential or cardinal to our day-to-day life, but merely wants. And yeah, I think just responding quickly, those are some of the issues I can think of. Thank you.
All right, thank you, Mwanga, for those comprehensive responses to our individual audience and with regard to what they have asked. I shall also allow the opportunity to Mark Mfula to ask his question. I see that you have raised your hand. Mr. Mfula, you can go ahead and ask your question. You are unmuted.
Thank you very much for this opportunity for these lessons. I've learned one or two things, especially on the budgeting aspect. Okay, I just wanted to find out, are you going to also share, because I didn't quite get the template for the budgeting allocation. Yes, but I've really enjoyed the lesson, and I've really seen some insights on where I need to improve on the budgeting aspect. Thank you so much.
Mr. Mfula, thank you for your words. We definitely appreciate the words that you have shared. At the same time, I just missed the first part of your statement. I believe you had asked a question earlier on, right before you commended us for sharing sharing such a presentation.
Yes, so I just wanted to find out on how I can access that template for the budgeting allocation. Yes, that's what I wanted to find out. But I think you mentioned that you share after the end of this presentation.
Yes, yes, agreed. We will definitely share at the end of the meeting without haste. Yeah.
Thank you.
So, okay. I see another hand. Mitch Mukula, please go ahead and ask your question. You have been unmuted.
Good afternoon. First of all, let me say thank you for the presentation. It's really eye-opening. I've enjoyed the presentation. But on the presentation, you were talking about investment, and investment you touched about unit trust or collective schemes. I wanted to find out where can I have access on collective schemes or unit trust?
Okay, thank you for that question. So typically, we have who we call capital market operators, and the specific entities or companies that manage unit trusts, in our case, collective investment schemes, are called fund managers. So we have a list of licensed, it's very important to deal with licensed financial institutions. So we have licensed a couple of fund managers, about more than 6 or so, which we have on our website under capital market operators. So what I normally encourage people to do is to undertake some mystery shopping, where essentially you are comparing the various products and services that these fund managers may be providing, and from there being able to make an assessment on which one makes the most sense. It would be informed, obviously, by the cost of first and foremost accessing that financial product, because they do also have management fees, or that they charge for giving you that advice or helping you access these products. So you can go again to our website and be able to see the fund managers that we have. Thank you.
Thank you, Muvanga, for that response to the gentleman. At this point in time, I saw another hand. Oh, there's no other hand. That's Mr. Full. I believe he forgot to bring down his hand. Unless there's any other question that you'd like us to attend to. Seeing that we have responded to all the questions in the comments section. Okay, so there is a question from an anonymous attendee, and looking at time, I think we'll make this one our last question. So anonymous attendee asks, what if you keep borrowing from externals because your source of income does not necessarily meet your needs? How best can you help such a one?
Okay, this one is a very complicated and tricky one, because what I get from this is that it's basically living an unsustainable sort of a life, and possibly living beyond one's means. So what I would essentially advise, first and foremost, is to reassess the expenses to align with your income minus any borrowed income. Once you do that, you will be able to know what your income can accommodate, And the options you would be possibly be looking at are reducing your expenses so that you can first and foremost live within your means, which also includes debt repayments, because it is very cardinal that every debt that we acquire, we must be able to account for it by being able to borrow responsibly and repay it back. So it is actually also a budget item, debt repayment. So only when you have that sort of balanced budget, which allows you to pay off for your expenses, should you even think of borrowing, because it may run you into deeper waters and deep troubles. That would be my advice. And also essentially would be to increase your revenue by engaging in income generating activities that would help you live a sustainable lifestyle. Thank you.
Thank you, Muvanga, for that response to our colleague who has made the request of trying to be helped on how to break the cycle of borrowing and, of course, living within their means. So I think we can accommodate this last question, which is more forward thinking. The individual would like to know, in terms of what lies ahead, if there'll be any such training where we'll look at investment opportunities in the financial, pardon me, we will look at investment opportunities in the financial sector. So will there be such training in future whereby we look at investment opportunities in the financial sector? And the swift response to that is yes. Please keep tuning in, and you'll definitely get to experience that kind of presentation very, very, very soon in the coming months. Without much ado, I have been your moderator, Sichone Chanda, and with my colleague, the presenter, Mr. Mwanga Kondola, manager for financial inclusion. So please, everyone who I see some questions are still coming in, whether we shall share the presentation or the recording. So everything will be shared immediately, the recording itself, and the rack track too. Everything will be shared to you, hopefully before the end of the day today. So at this point in time, I'd like to thank you for your attendance for today's town hall meeting, and enjoy the rest of your week and have a productive day today. Thank you.
Thank you, Sichone. Thank you, everyone. We hope to interact with you more often in our upcoming town halls. Have a pleasant rest of the week.